Hold your horses, Jeff. The opening
Easy there, big fella.
Is it saying for Bill? Bill and Jeff?
Absolutely.
Yeah.
I mean, look, it might well be. I'm not to know. It's a downward line, the trend line. It's bust. If we were to carry this on for 2 or 3 years, it would be at 0%. So it's going to have to break it sometime. The point is that yields got to higher than this in March last year. So until that sort of breaks, and we're pretty close to that on the 10-year yield, let's not get too ahead of ourselves.
Should we be more focused, as you say in your piece, on the 30-year and actually the curve rather than just one part of the curve?
Exactly, most certainly. It's how basically long-term bond yields have not really done anything in the last year or two. They've resisted inflation, or because there isn't any inflation of any major sense, whilst the Fed's been hiking rates. So at some point, normally you would say that would be a recessionary call. It's equities versus bonds, the big battle here, and it looks like bonds maybe are breaking and equities are going to win because the economy is coming back strong. But the reality is that we have to be a little bit more careful here. We've got a lot of supply the next few days. We've got a 10-year today, we've got a 30-year tomorrow in the States. Similarly, all around the world, we've got a lot of government supply. This is what bond traders do. They run it down into the auction, they get the bids as low as they possibly can, they back the bids in, they cover their shorts, and back up we go. We've got a CPI number in the States on Friday. I'd like to see the close on Friday. If it's a new weekly low, then I'm going to start agreeing with Jeff and Bill on here. Until that point, just take your time.